to Chapter 1, Financial Mathematics. Today we'll be looking at Exercise 1B, Financial Applications of Percentages. So we're building on what we covered earlier in Exercise 1A with percentage calculations. On the screen now, you'll see a number of financial terms. Okay, these are all really useful. You'll come across them a lot the second you start working, basically. Okay, and they are gross income. So that's the amount that you earn on tax. When you get told this is how much you'll get paid, it is your gross income. Your net income is what you actually receive after tax and any other deductions. So if you're like me and you have a HECS debt to repay, that would count as a deduction, okay? Commission is something that you earn in specific jobs, usually sales-based jobs. So car salesmen would receive commission, furniture sales, anything that sort of sells and makes a lot of money is going to earn a commission, okay? And that's usually a percentage of the amount of sales that you as an individual make to customers. People who earn commission also earn what's called a retainer, okay? Or it might be, say, if you hire a carpenter, you might pay them a retainer as a base rate and then pay the rest out at the end of the job once we know exactly how much the job will have cost and how long it takes. Salary is a fixed regular payment, okay? So usually a salary is expressed as an annual sum and then is paid as installments of that yearly sum every week or fortnight or month, depending on how the salary is paid out. And finally, wage. That's a fixed regular payment earned for work or services. So you guys will mostly be earning a wage at your age because you are working a certain amount of hours in a casual job typically, and therefore will earn a wage. Your pay will change every single week, so you won't have a salary, but I urge you all to check your pay slips because you will see these two terms at the top, gross and net income, on there. Let's jump straight in with a couple of examples. First of all, we're going to look at what the selling price of a TV would be, originally priced at $1,340 after a 10% discount. Now, I do have a handy formula for you all, and that looks a little bit like this. So the selling price of an item is going to be equal to the original price multiplied by whatever 100 plus or minus the markup or discount, which I'm just going to put as a percentage. Actually, forget the percentage symbol. Let's use the letter R instead. So R is something that we're going to be using moving forward to express rates, and later in this chapter, interest rates. So whatever the percentage increase or decrease is, if we're marking something up or discounting it, we'll use the negative with the percentage rate, and we make sure there's a percentage outside of that. So the selling price of the TV, which I'll write the word selling price again. You could use TV, you could use the word cost, whatever it might be. So this is the amount of money that you would purchase the TV for, originally priced at $1,340. So that's our original price after a 10% discount. So we put in 100. We are discounting, so we subtract 10 and write that as a percentage. You could type that in your calculator directly, or you could type in, multiply that by 90%. So what that means is that you're going to spend 90% of the original price, and we get $1,206 as our answer. So entering either of these in your calculator, just be careful that you put the brackets in and the percentage symbol outside. It should be formatted exactly like this in your calculator. Okay, of course you can write 90% as 0.9 if you would rather do that, and that will get you the same answer as well. So what this means is that you would buy this TV for $1,206 after a 10% discount, where this was the original price. One more example for you. Okay, we're going to calculate the selling price of a rug after a 34% markup is applied to its wholesale price of $280. So the selling price again, this time the original price is $280, and we're going to multiply it by, if I can write normally, Okay, we're going to multiply by 100. This time we're marking up. When we mark up, we increase the percentage amount that we're paying, and that amount is 34%. I'll put the percentage outside. So what this means is that the retailer purchases the rug for $280. How much are you going to spend for it after they apply this markup? That would be to perhaps cover their rent or their employees' incomes or their own profit margins. Again, you could simplify this calculation first before you type it into your calculator as 134%, or you could go straight to typing in the answer. And of course, for that we would get $375.20. Your calculator will not give you this zero on the end. You need to be very, very careful that you include that in your final answer. Whenever we write things in terms of money, just as we would in the real world, we give it to 2 decimal places because there are 100 cents in the dollar. So all these definitions here will hopefully help you understand just some of the words that you'll see pop up. Please don't get caught too much on them. The formula that I've written here on the screen is going to be the most useful thing to you. Of course, if you want to calculate the original price given the selling price, divide the selling price by this figure here. So we rearrange that. We have done a whole term and a bit of algebra, so that shouldn't be too difficult for you. But as always, if you have any questions, please let me know, and I'll speak to you all very, very soon. Good luck with the work, guys.